Hey everyone, welcome back to our series where we break down India's top mutual funds. In this episode, we're turning the spotlight on the Motilal Oswal Large and Mid-Cap Fund, a scheme that focuses on both large and mid-sized companies to deliver long-term wealth creation. If you missed our earlier videos, don't worry, you can catch them by clicking the info button. We've already covered top funds from AMCs like Invesco, Quant, DSP, HDFC, and more. In this video, we'll cover everything you need to know. Basic details, investment strategy, portfolio mix, top holdings, sector exposures, fund manager insights, investment details, performance snapshot, risk and return metrics, and taxation. But first, here's a quick word about us. We are PA Wealth, a full-spectrum investment firm offering expert guidance in PMS, mutual funds, AIFs, bonds, insurance, IPOs, startup investments, and Dubai real estate. Subscribe to our channel and stay tuned for research-backed market insights and wealth-building opportunities. Let's begin with the basics. The Motilal Oswal Large and Mid-Cap Fund was launched on the 27th of September 2019 as an open-ended equity scheme. As of September 2025, the fund manages assets worth around 12,600 crore rupees with a NAV of 25 rupees. Moving on to the investment strategy. The fund follows an active bottom-up approach and uses the QGLP framework: quality, growth, longevity, and price. It focuses on high-quality businesses that are scalable and sustainable. The portfolio is built with high conviction across market caps and sectors, while debt instruments and derivatives are used to manage risks effectively. Now let's take a look at the portfolio mix. The allocation is well spread out with 39.9% in large caps, 38.5% in mid caps, and about 20.7% in small caps, while the remaining 0.9% is in others. Let's move on to the top holdings. The fund is anchored by Eternal Limited at 7.24%, followed by Bharat Electronics at 4.29%, Wari Energies at 4.23%, CG Power and Industrial at 3.97%, and Siemens Energy India at 3.71%. Now let's check the sector allocation. The fund has the highest exposure to electrical equipment at 20.08%, followed by aerospace and defense at 12.6%, finance at 10.97%, e-commerce at 10.68%, and consumer durables at 8.38%. This spread gives it exposure to both cyclical and structural growth themes. Next, let's talk about the fund managers. The fund is managed by a team of 4 experienced professionals. Mr. Rakesh Shetty. He has over 13 years of overall experience, spanning equity and debt trading, exchange-traded fund, ETF management, corporate treasury, and banking. At Motilal Oswal AMC, he has been involved in managing ETFs, customized indices, and product development. His expertise lies in creating efficient investment products and handling complex portfolios, which adds a strong technical edge to the fund's management. Mr. Ajay. With more than 13 years of experience in fund management and research, Mr. Ajay has a proven track record in handling equity funds. Before joining Motilal Oswal, he worked with Canara Robeco AMC, where he was responsible for managing their small-cap fund. He holds an MBA from Manipal University and brings a solid combination of academic knowledge and practical expertise in identifying growth-oriented businesses. Mr. Sunil Sawant, associated with Motilal Oswal since 2018, Mr. Sunil has been in the capital markets since 2009. He has worked with top names like Sharekh Khan, Aditya Birla, and Angel Broking as an equity dealer and advisor. Initially part of Motilal's alternates business, he transitioned into fund management and was formally appointed as a fund manager from July 1, 2024. His deep market dealing experience and advisory background helped the team in navigating market volatility and execution efficiency. Mr. Atul Mehra, passionate about investing since the age of 13. Mr. Atul brings over 15 years of professional experience, with the last 10 years at Motilal Oswal Group. Prior to that, he worked with Edelweiss Capital for 5 years. He is a CFA charter holder from the CFA Institute USA and also holds academic qualifications in finance, accounting, and commerce from Mumbai University. His strength lies in long-term investing, deep research, and high-conviction bets, making him a critical pillar of this fund strategy. Let's move on to the investment details. The minimum lump sum investment is 500 rupees, while SIP can be started with as little as 100 rupees. The scheme has no lock-in period. However, there is an exit load of 1% if redeemed within 365 days and no load thereafter. Now let's look at how the fund has performed. In the last 6 months, it delivered 16.88% returns compared to 8.01% for the category average and 8.19% for the benchmark. Over the 2-year period, it generated 26.91% versus 17.64% for peers and 16.85% for the benchmark. Across 3 years, the fund delivered 28.12%, well ahead of both the category's 18.54% and the benchmark's 18.78%. And over 5 years, the returns stand at a strong 29.10% CAGR compared to 21.96% for the category and 23.07% for the benchmark. Clearly, this fund has consistently outperformed. Next, let's evaluate risk and return metrics. The fund has a standard deviation of 19.32%, which is slightly lower than the benchmark's 20.02%. Its Sharpe ratio is 0.82, better than the benchmark's 0.51, indicating stronger risk-adjusted returns. However, with a beta of 1.1, the fund tends to be slightly more volatile than the benchmark. Finally, let's talk about taxation. Short-term capital gains, if redeemed within 1 year, are taxed at 20%. Long-term capital gains, if held for more than a year, are taxed at 12.5%, with an exemption on gains up to 1.25 lakh rupees per year. Dividends are added to the investor's income and taxed as per slab. If dividend income exceeds 5,000 rupees in a financial year, 10,000 rupees after April 2025, 10% TDS is deducted before payout. That wraps up our deep dive into the Motilal Oswal Large and Mid Cap Fund. If you found this breakdown useful, do give the video a thumbs up and subscribe for more crisp, research-driven investing insights. Don't forget to tap the bell icon for updates and let us know in the comments which fund you'd like us to cover next. Until next time, invest smart and we'll see you in the next video.